we've got a flood of announcements. I usually pick a stock of the day, stock that's in the news, but it's been a mammoth day when it comes to reporting season and company news. So I'm going to cheat a bit today and get the opinion from our experts on two stocks. Just sort of give them 30, 60 seconds to cover each of them, what they think of the announcement and also what they think of the stock at the moment. CSL, big favourite here on the call, one of our big health care companies, global healthcare company, posting a 5% drop in half-year profits as Omicron restrictions hit its plasma collection business, particularly in the US. You get paid to give blood over there. Net profit after tax at constant currency coming in at $1.75 billion. That's a beat on the consensus of $1.5 billion US. Declared an interim dividend of $1.04, the smallest since March 2018. Carl, what did you think of the result and CSL at these levels?
Yeah, a bit cheeky there, Koshy, throwing two stocks of the day at us in the middle of reporting season as well. Probably the busiest day as well. I'll tell you what, wake me up when February's over. It is hard work as a stock market analyst at this time of the year. Look, I thought it was a pretty good result. If you look past, as you say, the immunoglobulin business, which is still suffering the impacts of COVID, the rest of the business was doing much better. So, like you say, it's widely held, and certainly here at ThinkMarkets, our clients have this, and it's one of the most asked about stocks we have. I mean, almost a daily basis, clients are saying, when can I buy? And that's definitely the rhetoric around their inquiries is, when is it time to buy? And I did a client webinar yesterday, and honestly, I could not provide them with a definitive answer, because whilst I think it's starting to look quite cheap, I mean, at 240, our discussions were, look, it's looking very cheap down there. Our fair value targets are at about that $294 level. Brokers are even higher than us. A broker consensus is 322 and an average rating of a buy. So it's looking cheap down there, but again, because of that technical bias that we have over here, where we run that filter, we do need a chart to be at least showing some signs in the short term that's picking up. It's more of a pass for us. So I'm going to stick with that rhetoric, but if you've got it, I guess maybe there's some comfort there. Then on a valuation basis, we're probably very cheap around 240. Probably seen the lows with this bounce now as well.
Okay,
so it's a hold.
Up 6% today on the result, Michael, CSL.
Yeah, look, it's probably our most widely held position, the biggest position that we have in our model portfolio. A lot of clients' biggest position. It's done very well over a long period of time, but it's been under a bit of pressure now for probably a year and a half almost. So I think I've been saying to buy it at 270, 275. So most of our clients are pretty full up on it. For brand new clients, we would have no hesitation in picking it up. We think the long-term outlook is pretty good for a high-quality business. Obviously, they've had a setback because of COVID, but they guided the market pretty well for the next year. And if you look at those numbers, I think they should start to bounce back if they can deliver that. But obviously, the high PE, high growth names come under pressure, and this has been lumped in that basket. So happy to buy it. Okay, buy at these levels. Mark Morland from Team Invest had it as a screaming buy yesterday, where we talked about this is before the 6% increase. But yeah, I remember not so long ago where the consensus here on the call was, if CSL ever gets below 300, buy it. Oh, then it could go 270, 260, 240. Well, history does suggest there can be, multi-years where CSL goes sideways. I mean, it listed in the early 90s. It didn't always go up every year after year. There are periods where it consolidates, and potentially this is one of those periods.
Okay. The other stock I thought we'd just quickly ask the guys about is Liontown, another favourite of ausbiz viewers, because we can track what people are interested in through the app. Eyeing the best day in 5 months as it inks a 5-year lithium supply agreement with Tesla. Carl, what do you think of the Liontown announcement?
Look, I mean, you don't get any bigger in the business than Tesla, isn't it? If you can sign a binding offtake agreement for about a third of your expected first-year supply with a name like that, that's always going to be a bit of a boost to your share price. Incidentally, they actually signed a similar deal back in January with LG for about another third. So there's still, about a third there that's remaining, and they may not look to lock that up because the lithium price is so high at the moment. So spodumene concentrate, which is what these guys are producing, has literally doubled in the last sort of 6 to 9 months, hovering around about 2,500 a tonne. Now, at that level, the net present value of their business, of their asset, is about $7 billion, and that compares to about the $4 billion from their DFS, which was using prices from about 12 months ago. So the market cap on this one is about $3 billion. Net present value potentially $7 billion, and I think this is the risk for investors, is that you can't necessarily go, well, $3 billion current market cap, $7 billion net present value, and draw a straight line between them and say, well, it's looking cheap. I think I think there's a great cash earner here. I think from late 2024, 25, when the cash starts coming in, it's going to look very good. But the problem for Liontown now, what investors have to understand, is we've gone from 12 to 18 months ago where nobody knew about this asset, and it was about 50 cents, and we started talking about it over here at ThinkMarkets and putting it out in technical scans, to a point where everybody knows about it now, and it's trading with a much higher valuation. And because we've still got that huge lead time out to first production out in 2025, and then cash flows and then valuations, investors have a habit of getting a bit bored with these things, and they start to, as the price starts to sort of profit taking comes in, and the price starts to wane, momentum tends to build on itself, and it tends to, stocks like this can pull back significantly before we get to production, and then maybe the market starts to look at it again. So that would be the only risk I have with LTR. I think the chart's starting to reflect that scenario. We are pulling back from those $2 highs. We're sort of making a base around 140, but let's just look at the price action. That is the peaks and the troughs, and the candlesticks predominantly black tells me we've gone from this buy the dip sort of mentality about Liontown to more of a sell the rally mentality. I'd be starting to get a little bit concerned, even looking at today, popped up on what is on the face of a great announcement, but then fading back. So again, it's that sell the rally mentality. I would say if we get below that 140, it could be a long wait before you get another look at $2 again. So it's about managing our exits for us over here at ThinkMarkets with this one. If you've had a really good run, we're just looking for exit points at this stage, and then we might look at it again when they get closer to production.
Are you saying sell the rally today?
Yeah, I'm going to go so far as to say lighten the load.
See, these West Australians, they sort of all stick together.
It's a lighten. It's
a lighten.
A lighten. So you're not selling everything,
right,
but you might sell, say,
take profits. Okay.
Yes.
Michael?
I think Carl makes some great points there about sort of market dynamics and behaviour that, when there's lots of good positive news flow and the lithium price is doing well, there's a lot of positivity embedded in the price. And then if things go quiet for a little bit, you might see the heat come out of the share price. I don't know as much about this company as Carl, or probably many of your readers and viewers, but obviously the lithium space has been very, very hot. There's definitely, in our view, a long runway to usage for lithium, and it's just a matter of how the price holds up. Last time there was this big influx of supply that flooded the market, the price came down. We might see something similar to that again, or we might see demand a bit more entrenched. We're pretty optimistic on the space. We don't hold this one specifically, but it's been a wonderful performer. Just keep in mind that with this agreement with Tesla, it doesn't really kick in for another few years yet, and it is contingent on them getting that Kathleen mine up and running and into production. Right. So there's a bit of water to go under the bridge there before it's a guaranteed cash in the bank for them.
Right, so...
Look, I'm happy to hold it.
Hold it.
Okay.